Hello students, in the previous session we discussed about incidence of tax liability. Under that we studied the incomes which are taxable or not taxable under ordinarily resident, not ordinarily resident and non-resident. And we also discussed about deemed to be received income, income accrued, deemed to accrued income, and the chart showing the incidence of tax on income of ordinarily resident, not ordinarily resident and non-resident. As per that chart, income received or deemed to be received or income accrued or deemed to be accrued, on such income all three categories of residents must pay tax in India. If the income accrued and received outside India from a business controlled in India, on such type of business, non-resident need not pay tax, and income accrued and received outside India, whether remitted to India or not ordinarily resident and non-residents need not pay tax, and on the amount, that is past untaxed profits or income remitted to India in the previous year. All three categories of residents no need to pay tax. So, this much we learnt in the previous session. In this session, let us solve some problems relating to incidence of tax liability. This type of problems are important for 16 marks in your final exam. Before starting the problems, you have to learn or you have to study thoroughly this table, that is table showing scope of total income. There are 34 items relating what we discussed in the previous session. That 34 items are explanation for the items which we discussed in the previous session. So, you have to go through these 34 items thoroughly and you have to write down these 34 items. It is must. And I am not going in detail because we already learnt it in the previous session and we are going to study about it while solving the problem. I am discussing only few things here. That is 7th item, that is income from agricultural land. If agricultural land is situated in India, that type of income is exempted from a tax. See the 7th particular, that is relating to that. Income from agricultural land situated in India exempt from tax under all three categories. If such land is situated outside India, ordinarily resident must pay tax, and not ordinarily resident and non-resident need not pay tax, that is not taxable income for them. And C, other things you can understand by reading these points. Next C, 26th item, that is dividend from Indian companies whether received in India or outside India. Such income is exempted from tax, that is dividend from Indian company. Next 34th item, that is gift from a relative whether received in or outside India also exempted from tax, and gift from a friend, that is 33rd one, that is gift from a friend received outside India taxable under ordinary resident only, if received in India taxable under all three categories, and exempt if the gift in aggregate do not exceed 50,000. That means if the gift from a friend is not exceeding the amount 50,000, such kind of gift is exempted from tax. This much you have to remember. And see the notes. If the gifts are in kind, excluding jewelry and immovable property, shares and securities, they are not taxed in the hands of SEC. Other than these 4 items, that is jewelry, immovable property, shares and securities, other gifts are not taxable under all 3 categories, that is ordinarily resident, not ordinarily resident and non-resident, that is totally in the hands of SEC. And if the aggregate gifts exceed rupees 50,000, entire amount is taxable. If the gifts exceed 50,000, entire amount is taxable. If the gifts does not exceed that limit 50,000, no need to pay tax, that is exempted from tax. See the third one, interest on post office saving bank account in India is exempt up to rupees 3,500 under section 10 subsection 15. Interest on post office saving bank account up to 3,500 exempted. Above this amount, that amount is taxable, and the excess amount is deductible under section 80 TTA up to rupees 10,000 along with interest on bank savings account. Section 80 TTA is relating to deduction in respect of interest on bank deposit, that is savings bank deposit. Here along with that interest 10,000 also is deductible. You have to remember all these points, that is 34 items which are taxable under 3 categories and these 3 notes. Once again go through that points, and now let us solve the problems. See the first problem. The following are the income of Sri Ram Prasad for previous year. See the particulars one by one. Profit from business in Iran received in India rupees 1,05,000. That is profit from business in Iran but received in India, taxable under all 3 categories, that is ordinarily resident, not ordinarily resident and non-resident. All 3 types of residents must pay tax on this income because income is received in India. Second one, income from house property in Iran received in India. Irrespective of the place of house property, the income is received in India, so taxable under all 3 heads. Third one, income from house property in Pakistan deposited in a bank there rupees 1,000 rupees. Only ordinary resident must pay tax on this income. Not ordinarily resident and non-resident need not pay tax because this income is not at all relating to India. This income is not accrued in India or not received in India. So only ordinary resident must pay tax. And fourth one, profit of business established in Pakistan deposited in a bank there rupees 20,000. Out of rupees 20,000, a sum of rupees 10,000 is brought into India. This business is controlled in India. See here, profit of business established in Pakistan deposited in a bank there. If only this much is information given, only ordinary resident must pay tax on this 20,000 rupees. But there is one more sentence, that is business is controlled in India. If this line is given in the problem, ordinary resident and not ordinarily resident must pay tax. because not ordinary residents are responsible to pay tax on the income they received on the business controlled in India. Because of that reason, ordinarily resident and not ordinarily resident must pay tax, and a non-resident need not pay tax because the business is established in Pakistan and not in India. See the information given inside the bracket. Out of 20,000, a sum of rupees 10,000 is brought into India. As we discussed in the previous session, any income remitted to India not taxable under non-resident, so need not pay tax. See the next one, accrued in India but received in England. All three categories must pay tax on this income because accrued in India. Next one, see, profit earned from business in Kanpur. All three categories must pay tax. And next one, income from agricultural land in England. If the land is situated in India, exempt from tax. Here, income from agricultural in England, ordinary resident must pay tax on such income. Next, past untaxed foreign income brought into India during the previous year, not taxable under all three categories. So here you have to calculate taxable income of Sri Ram Prasad, assuming if he is an ordinary resident and not ordinarily resident and non-resident. You have to prepare statement like this, that is statement showing total taxable income, particulars and three amount column, that is ordinary resident, not ordinary resident and non-resident, and in particular column you have to enter the items which are taxable or not taxable. First one, profit earned in business in Iran received in India, all three categories must pay tax. Next one, income from house property in Iran received in India, all three categories must pay tax. Income from house property in Pakistan deposited in a bank there, only ordinary resident must pay tax. Next one, profit of business in Pakistan controlled in India, ordinary resident and not ordinary resident must pay tax, and non-resident not taxable. And income accrued in India but received in England, all three categories must pay tax, that is taxable under all three categories because income accrued in India. Okay. Next one, profit earned from business in Kanpur, profit arised in India, taxable under all three heads, and income from agriculture in England, only ordinary resident must pay tax. When you add all these amounts, under ordinary resident the taxable income is 7,33,500, under not ordinarily resident the total taxable income is 7,27,500 and non-resident 7,07,500. So like this you have to solve problem. For 16 marks they will give more items, you have to write like this only. At the end you have to total, that is you have to add up all the items, you get the total taxable income. So this is the problem. Let us solve many other problems so you can understand better. See the second problem. Mr. Jeevan Shastri earns the following incomes during the previous year. See the first one, income earned from a business in Bangalore managed from Singapore. Here profit earned from a business in Bangalore. Bangalore is situated in India, so it is taxable rupees 2,25,000 is taxable under all three categories. This is taxable under all three categories. And second one, pension from former employer in India received in Singapore. That is pension from former employer in India, taxable under all three categories. Next, see, income from property in Ceylon received in India. This income is received in India. You have to give importance to this, received in India, accrued in India. Here received in India, taxable under all three categories. Next, see, profit from profession in Bangladesh deposited in a bank there. Profession was set up in Bangladesh and amount deposited in a bank there only. Here only ordinary resident must pay tax, not ordinarily resident and non-resident need not to pay tax on this amount, because income arised in Bangladesh, not in India, and deposited in a bank there only. Next one, income from business in Ghana controlled from India. Here business set up in Ghana but controlled from India. Here only ordinarily resident and not ordinarily resident must pay tax. That is, this income is taxable under only two categories, and non-resident not taxable. Next, see, dividend on Indian company shares received in Japan. Here income is received in Japan but dividend on Indian company. As I explained in the beginning of this session, dividend on Indian company is exempted from tax. So you have to write it as exempted and it is not taxable. Next one, profit on sale of building in India received in Hong Kong. Building is situated in India, that means income is accrued in India. So all three categories, this income is taxable. Next, see, interest on Dutch government securities, half of which is received in India, rupees 5,000 rupees. The total amount of interest on Dutch government securities is rupees 5,000. Ordinary resident must pay tax on this 5,000 rupees, but half of which is received in India. That means rupees 2,500 is received in India. That means not ordinarily resident and non-residents must pay tax on rupees 2,500 only. See the solution here. Statement showing total taxable income. Again 4 columns, 1 particular and 3 amount columns. 3 amount columns relating to ordinary resident, not ordinarily resident and non-resident. Items you have to write it in the particulars column. See the first one, profit from a business in Bangalore managed from Singapore. All three categories taxable. Pension from former employer in India received in Singapore, because received in India. Here former employer is from India, that is why taxable under all three heads. Next one, income from property in Ceylon received in India. Income is received in India, that is why taxable under all three heads. Next one, profit from profession in Bangladesh. Only ordinary resident must pay tax, because here profit from profession in Bangladesh and deposited in a bank there. That is not at all relating to India. That is why not ordinary resident and non-resident need not pay tax. Next one, income from business in Ghana controlled in India. Business is controlled from India, that is why not ordinarily resident also taxable. Next one, dividend from Indian company exempted from tax. Next one, profit from sale of building in India received in Hong Kong. Here, income accrued in India because building is situated in India. All three categories taxable. Next one, interest on Dutch government security received in India, that is half of which is received in India. You have to remember that point, that is very important. Here ordinary resident must pay tax on entire interest that they received, that is 5,000, but not ordinarily resident and non-resident, they have to pay tax only on the income which they received in India, that is half of the income, that is 2,500. Okay, remember this point, don't make any mistake here. And the total taxable income of ordinary resident, you get 3,60,000, 6,000, not ordinarily resident 2,91,500 and non-resident 2,77,500. This type of problem is very easy to score marks, only the thing is you have to remember all these points. That is why I am telling again and again, go through that 34 items thoroughly and remember that points. Next, let us solve the last problem in this session. Nair gives you the following particulars of his income earned during the previous year. See the items, I am explaining the problem while reading only. Here see, interest on Indian company debentures 16,000, interest on Indian company debentures. Here not the dividend on Indian company securities, it is interest on debentures. So taxable under all three categories because Indian company. Next one, interest on bank fixed deposit rupees 15,000 accrued but not received. Whether accrued or not or received or not, it is taxable because it is accrued in the previous year. So interest on bank fixed deposit, it is taxable under all three categories. Next one, income from agriculture in England rupees 50,000, of which 30,000 is remitted to India. Here income from agriculture in England, only ordinary resident must pay tax on this 50,000. Here 30,000 is remitted to India. This information is negligible because you have to here income remitted to India or not ordinary resident and non-resident need not pay tax on that income. That is why you have to ignore this 30,000. Only ordinary resident must pay tax on this 50,000 rupees. Next one, income from house property in England deposited in a bank there rupees 25,000. Only ordinary resident must pay tax because this income is not at all relating to India. It is not received in India or accrued in India. That is why only ordinary resident must pay tax on such income. Next one, profit on sale of building in Mysore received in England rupees 1 lakh. Here profit on sale of building in Mysore. Mysore is situated in India. That is why all three categories taxable, that is rupees 1 lakh amount. Next one, income from business in Singapore, that is Singapore, controlled from Bombay rupees 60,000. Half of this is received in India. Here ordinary resident must pay tax on entire 60,000 and also not ordinarily resident must pay tax on entire 60,000 because this business is controlled from Bombay. Bombay is situated in India. Only non-resident must pay tax on half of the amount, that is on rupees 30,000, because here half of this is received in India. That is why non-resident have to pay tax on 30,000 and ordinary resident and not ordinarily resident must pay tax on 60,000 rupees. Next one, pension from former employer in Bombay received in England rupees 40,000. Here pension from former employer, here former employer is in India, that is why taxable under all three categories. Next one, past untaxed profit of rupees of 1998-99 brought to India during the previous year 80,000, not taxable under all categories because it is not relating to the previous year. Compute the total income if he is ordinary resident, not ordinary resident, and third one non-resident. Same thing, same columns you have to draw. Statement showing total taxable income, items you have to write in the particulars column and amounts you have to write in the amount column. Go through these items and amounts. When you write all these things in this format, the total taxable income of ordinary resident rupees 3,06,000 and not ordinarily resident 2,31,000 and non-resident 2,01,000 rupees. Go through this problem once again. In the next session, let us solve the problems which appeared in previous semester exams for 16 marks. For that you have to remember that 34 items and let us solve the problems in the next session. Thank you students. Let us meet in the next session.